Hi, everybody. Jim Curzan here, and welcome to June 5th. Actually, the market's uh, just ended for the day. It's a little after 4, and I thought I'd record this quick little message. Um, it's really just nothing more than a summary of last month. If you like these updates, let us know. We'll try to do it every month, just so you have a better idea of kind of what we're seeing, what we're thinking, etc. Should be quick, so let's get right on to the slides. All right. Well, for the longest time now, we've been saying, as far as we're concerned, there are three things that can happen to the economy and the markets. One is a recession, which is still somewhat our base case. We've been saying that a long time, totally feel like a broken record, but we're data dependent, and the data continues to show weakness. The way recessions usually occur is data continues to weaken for a period of time until the floor just kind of drops out. And then everybody's somewhat surprised by what just happened. So as long as the data continues to weak, we feel it's important to be somewhat defensive. The other thing that could happen is a soft landing. These do not happen often, as we said before, once in the last 75 years. And quite honestly, if you look at the environment that soft landing operated in and the environment that we're in today, talk about economic environment, they're a little bit different. The Fed back then didn't have inflation to deal with, could cut rates very easily. Not quite the same today, but the data should show improvement, in which case we feel obligated to reduce some of our protection in the portfolios and add to equity exposure. Certainly don't want to do that if we're going into a recession, but if the data suggests soft landing, then certainly we would want to do that. And then the other thing that's a bit more perplexing and certainly could happen in either of the other scenarios is at some point, if this market really is as strong as people think it is, if the economy is as stable and strong as it seems to be, or people are suggesting it is, we should see a broadening out of the market. It's super dangerous to have the market performing based on just a handful of securities. And maybe I'm a little bit sensitive to this because I've been doing this quite some time. And this is exactly the kind of situation we had back in the 1990s. It wasn't AI, it was the internet. And it had let's just say, not a pleasant outcome. So this idea that the market is moving up uh, because everything is great and might be a little bit of a stretch. It's really moving up because Nvidia is getting a lot of attention. So we're watching this as well. Should we see a broadening out, we would certainly entertain expanding exposure to those areas. But up till now, as you'll see in a moment, that has not yet been the case. And really, this is the reason why we're having this quick presentation, just to kind of recap the month that we just had. So I've mentioned before in a previous recording some of the economic data that came out primarily through the full month of May. This is the economic data that has come out so far this month, which is just the last 2 or 3 days. Manufacturing PMI continues to contract. That means getting weaker. Construction spending actually contracted. It fell by a negative number, which is a contraction compared to a 0.2% increase. The ADP employment report came out. It was 152,000 new jobs. That came out this morning versus 173,000 estimate, which was still a weakness compared to the 188,000 the prior month, which was revised down from 190 some thousand. So that's a sharp drop in employment. And for the longest time, employment has been really strong. And it's usually the last thing to drop before a recession. The JOLTS report, which is job opening or total number of jobs out there available, came out yesterday. And that also was a substantial drop, just barely over 8 million versus an 8.4 million estimate versus 8.5 million the month before. So economists were expecting a little bit of a slowdown, but not nearly the slowdown that we saw in both the JOLTS report and the ADP report. Now, 1 month does not a market make, but if it becomes a continuing trend and is followed up by another month of weakness, you'll start to see some interest in that with respect to the broad-based markets. Not so much yet. Let's talk about returns. The S&P was up about 5% for the month, up over 11% for the year, as was the NASDAQ. But look at the Dow Jones Industrial Average, up 2% for the year and 2% for the month. In fact, Friday was the end of the month, and the Dow Jones Industrial Average was up 1.51% on that day alone, which then caused the month to be up 2.3 and the year to be up 2.5. Pretty anemic. And the same is true with the Russell, which was up 2.7. And all the while that's happening with everything outside of the Magnificent Seven, the bond market isn't participating much at all. Bonds are down anywhere from 2 to nearly 8% year to date. So if you're looking at your very conservatively structured IRA for the reasons we've mentioned, and you see, gee, we're up a 1% or so for the month. Well, that's kind of why. If the broad-based market is up 2+ and bonds are generally down 2+, that's kind of what you get. So it's a little bit frustrating. And let's just talk for a second about this concentration, this Magnificent Seven. I mentioned that also because today, NVIDIA was up over 5%, primarily going into this split that they announced. There are so many people, we see it all the time, think that you buy the stock before the split because you're going to get 5 times the amount of stock as it's a 5-for-1 split. That's not how it works. You'll have the same amount of money invested in NVIDIA. You'll have 5 times the number of shares at 1/5 the cost. And generally, as has happened in many times before, after the split, the stock kind of resets. But for the month of May and year to date, those Magnificent Seven were pretty magnificent. In fact, if we took the returns, which you see here, multiplied by the weighting of those shares, Microsoft is nearly 7% of the S&P. Apple's over 6. NVIDIA is now over 6. And you multiplied return times weighting, you would see that the weighted return in the month of May for the Magnificent Seven was 4.59%. For the full S&P, it was only 5.16, which means that essentially, it doesn't quite work this way, but you'll get the idea, that the Magnificent Seven contributed 89.12% to the S&P 500's return. It's no wonder that the S&P is way up here and everything else is down below. Very similar to the 1990s, 99, early 2000, until it wasn't. And the year-to-date numbers are even more narrowly focused, with the weighted average return of the Magnificent Seven as being something like 11.25% as contributed to the S&P, and the S&P being up 11.27, that contribution is 99.78%. So the only way we get better return is by leaning into these stocks. And at this point, with this type of a bubble, I'm really not all that interested in doing that because the downside risk is significant. And we can talk about whys and wherefores maybe at another session. But this is a big, big concern. This market is really quite narrow. It is not representative of a broad-based recovery. So again, we're being very cautious. We're maintaining a defensive position until we see data vet out something differently. Once again, there are 3 things that could happen. We could go into a recession, in which case data continues to show weakness until a drop. We could see a soft landing where data will start showing improvement, and we're not quite seeing that. Certainly, we're not seeing that in terms of the employment numbers. We're not seeing that in terms of manufacturing. We're not seeing that in terms of retail, and so on and so forth. And we would expect at some point this market broadens out. and we're not quite seeing that at this point either. So we're essentially maintaining the course. I just wanted to give you that information to put some context and some narrative around the month that we just completed, the month of May. And my game plan is to do the exact same thing at the end of June to provide some context there as well. I hope this was helpful. Hope it was informative. We'll see you later. Have a great summer.